Good morning, traders. Richard Jennings, quick Ichimoku cloud chart market review and artificial intelligence trading review of GBPUSD cross currency pair. I've got the daily Ichimoku cloud up here. We can see we had a lovely rebound rally from a critical support zone back here. It grinded through the turning line and then through the standard line, and then it triggered a nice Ichimoku cloud chart buy signal below the cloud. We also had a nice volatility breakout AI generated signal down here, and then we also had the cloud chart cross buy signal there. So we had three beautiful buy signals in and around this cloud chart support zone and Ichimoku cloud chart zone. Strong rally then, got a little bit extended here. We then had a between 38 and 50% Fibonacci retracement here, and also then got the rebound from the front end cloud chart support zone, as well as this exponential 89 period Fibonacci moving average there. So nice secondary swing trade there to the upside. At this point in time, became a little bit extended from the top in the cloud. We always monitor the distance between the price action and the top in the cloud to know if the rally is becoming a little bit extended. We can also see that it's clashing a little bit with this resistance. Now this resistance comes from the September 2024 highs there, so we can see we might see a bit of a consolidation. Now we did have a quick swing trade to the downside, but that's a very short-term 2-3 day trade, the quick move AI to the downside. But also now you can also see how this rebounded from the 34 period exponential moving average, as well as the top end of the front end of the cloud chart support zone. So these are the new support levels. Once spot 32 is a new support zone for this rally. We can still see if this resistance level holds here, we can see a consolidation back down here and then level out here. And by that time, we could see another attempt at this resistance zone 1.34. But so far, so good. Nice volatility breakout trade. Ichimoku cloud chart swing trade there. And we had a very strong rally above the Ichimoku cloud, and now navigating this resistance zone. If resistance holds here, we could see a snapback. First stop would be the turning line of the Ichimoku cloud, then the standard line, and then the top end of the front end of the Ichimoku cloud. So that's the story on the daily, so keep an eye on those key levels. If we look at the weekly Ichimoku cloud, you can see this major reversal signal. A beautiful AI signal. It's very reliable. You can see we had another one there, captures the really big moves. You can see in Q1 of last year, January, we had that signal, and we had a really nice rally in sterling on the weekly Ichimoku cloud. Now navigating this resistance zone there, so we could see a snapback to the turning line of the Metro cloud and the standard line of the Ichimoku cloud. So that's the turning line. What's that level? The first one. Let me put a line in there. So that's the first level of support on the weekly. And the next level of support would be the turning line. Now that is leveling out here, so you can see we could see a Fibonacci retracement of this move, back down to test support at the top in the cloud. So that's the downside risk that sterling would sell off here. First test support at 130, and then the top end of the cloud, the next zone to test, as well as the top end of the front end of the cloud, 1.27. So these are the downside risk targets if this resistance level holds on the weekly Ichimoku cloud. Next up is the 4-hour Ichimoku cloud. Swing trades, they worked out beautifully there. Yeah, we had a nice little rebound when the price action became too far extended from the cloud. Once again, that's the kind of the mean reversion concept, where we look at where if it gets too far extended from the top end of the cloud or too far extended from below, we're going to get the mean reversion back up to the bottom in the cloud. So that was a nice Ichimoku cloud swing trade back to that resistance zone. You can see that top in the cloud, there's a major resistance zone. We then snapped back to rebound from the standard line of the Ichimoku cloud, broke through the cloud chart resistance, snapped back to the bottom end of the front end of the cloud. So that was another place to swing trade the sterling GBPUSD pair, and then we had a nice strong rally after that on the 4-hour Ichimoku cloud. Now key levels to watch out for on the daily is this standard line in the Metro cloud. That is a let me just put that line in there properly. That's the new support zone, so we could see a snapback to that zone, 133. Watch out for the front end of the cloud. It's on its way to be testing that top end of the front end of the Ichimoku cloud. That's the next zone to test, but these two levels, watch out for a particular snapback down to those levels. And if we're very weak, then sterling can hit these moving averages, as well as the front end cloud chart support zone. So the bottom end of the front end of the cloud is also another support zone. So this downside risk to one spot 33. So keep an eye on that. And then this bottom end of the front end of the cloud. Now, so far sterling is in a uptrend as long on the 4-hour. But if we slice through the bottom end of the Ichimoku cloud, then we're going into bearish territory. So price action above the cloud is bullish, and price action below the cloud is bearish. So that's the line in the sand. That's the last time to, the last warning signal that we're heading down. But so far so good. Nice strong rally after breaking out the cloud chart. Cross buy signal here. Nice strong rally. A little bit extended. Now consolidating back. So watch out for potential swing trades on the 4-hour when it supports this 1 spot 33 zone. And this one spot, where's that signal here? 1 spot 3357. So these are the downside swing trade risk targets on the 4-hour Ichimoku cloud. Popping a Fibonacci study on top of here, we can see that 23.6 is the first stop. Getting close to that line, and that coincides very well with that exponential 21 period exponential moving average there. And then the 38% 0.2 retracement is a little bit below the standard line of the Ichimoku cloud, but it's also very close to this old resistance zone, which now turns out to be a support zone. So any kind of snap back to these levels between the standard line of the Ichimoku cloud and the 38% Fibonacci retracement, we can see another attempt at a rally from that zone. But so far so good. Nice strong rally on the daily. The weekly, the AI captured a nice big move there, and then the sterling on the daily, we had a nice beautiful volatility breakout trade there. And watch out for any kind of pullback back down to the top end of the front end of the cloud. But so far so good. I need to see a breakout past this resistance zone, but until then, keep an eye on those downside risk targets if this resistance level holds on the GBPUSD daily chart. Until next time, happy Ichimoku cloud and AI trading. Bye for now.